CNBC TV18, celebrating 15 years of leadership.
Hello and welcome to Markets Today. I'm Lata Venkatesh and with me is Ekta Batra. It was a market which played exactly like expiry contracts do. Up until about 2 o'clock, the markets tried to hold up some of its gains, but thereafter the weakness of the weeks of the previous weeks showed up and the markets had to end below that 8,200 mark. A big fall as far as the indices were concerned, but the mid caps kind of held up. Hi, Ekta.
Hi, Lata. Absolutely. In fact, for the December series, the Nifty has lost around 3.6%. But all that and more in the next 30 minutes. Let's take you to the top stories. Markets wrap up December expiry on a weak note, with the Nifty closing below 8,200 today, with IT and oil and gas stocks being the most pressured. Mid-caps, however, outperformed, with the mid-cap index ending flat and the advanced decline ratio at close to 1:1. The series, the Nifty has ended 3.6% lower.
Ultratech Cement was the top gainer on the Nifty, while JP Associates added over 8%, reacting to the Ultratech company buying 2 of JP's cement plants in Madhya Pradesh for 5,400 crore rupees. Other stocks in focus included Dr. Reddy's Laboratories, that was weak on Health Canada quarantining products from this company's Srikakulam plant.
And from the broader market, stocks such as Max India and RelCap gained as the Cabinet approved the ordinance on insurance. The Cabinet also cleared ordinance on coal, formula for coal block auction and price. Optus Circuits and BPL traded higher, reacting to the Cabinet clearing 100% FDI in medical devices.
Well, those were the headlines, and here are the experts that we have lined up on the show for you today. Market perspective from Alroy Lobo. Sudarshan Sukhani, as always, will join in to talk about the technicals of the market. And on our corporate radar, we will get you Manoj Gaur of JP Group to talk about the recent sale of plants to Ultratech.
Okay, well, straight to the day's trading action then. Expiry date jitters on the Lal Street has dampened the mood on Christmas Eve. Anuj Singhal is here with the day's trading action. Anuj, is expiry to blame for this correction that we've seen, or are there other factors at play as well?
No Christmas party for the Lal Street, because the expiry factors clearly played part in last 30 minutes of trade. But it was clearly just that, the expiry factor. Nothing more, nothing less. Just the simple expiry factor, the last 30 minutes of trade. Once in a while, expiry is like that, when the last 30 minutes are so volatile. And, as luck would have it, the last series of this year, which otherwise has been good, was reserved for that. But no complaints for the bulls, at least as far as the overall year is concerned. But in today's trade, it was broad-based. Financials, oil and gas, these stocks dragged the market, and the Nifty went below 8,200. Let's talk about the stocks then. The biggest drag on the index came from these 3 stocks. Infosys 2%, HDFC 2%, HDFC Bank 1.5%. Then, of course, you had some other heavyweights like TCS, Reliance, L&T. They were all lower as well in today's trade. And some other prominent Nifty losers included Dr. Reddy's, which has been one of the worst performing stocks this series, down 2% today, but down some 14% for the series. Lupin and ONGC were the other prominent losers. Let's talk about some winners then. The deal of the day, really, Ultratech Cement and JP Associates. And from market's point of view, it was win-win for both. So we had Ultratech, which was up 3%, and JP Associates was up about 9% or so. Some interesting gainers in trade, let me put it that way, in the mid-cap space. Optus Circuits 16%, MTNL 12%, and Unitech 4.5%. And on the losing side, you had GMR, Voltas, both on expiry factors, and Madhukon projects. So a series is done. Friday is expected to be a very low volume trading day. And after that, of course, we enter into the earnings season, which is going to be quite crucial.
Fair point, Anuj. We are getting into a crucial time, and perhaps there'll be fun and games only for one more week before the big boys, the FIs, return. Perhaps we could point out to a couple of more other interesting areas today. One, of course, was the finance space. The bank Nifty itself actually was an outperformer, and a whole host of PSU banks in particular did reasonably well. The Union banks, the Canara banks. Of course, to be fair, the yields fell and bond prices rose. That's always positive for the banking stocks. And the other set of stocks that did well, and which Ekta already alluded to, the insurance companies. With the insurance ordinance getting passed, you did see some kind of activity in the Reliance Capitals and the Max Indias of the world. So there are those pockets that are still holding out on individual news, and that may continue up until perhaps Jan 7th, but thereafter I guess the markets will get into the results syndrome.
Yes, well, time now for some market opinion then. We spoke to Alroy Lobo, Chief Strategist and Global Head of Equity Asset Management of Kotak Mahindra AMC earlier today, and he expects 15 to 18% gains from equities over the next 1 to 2 years and sees earnings to start picking up post FY16.
I would say something in the region of around 15 to 18% in rupee terms is what we would expect on a compounded annualized growth rate basis. If you look at a 5-year period, our view is that the first 12 to 18 months post Modi has been a case where investors are hoping for a lot of macro changes happening, a lot of imbalances in the economy being corrected. But post that, it's going to be far more earnings led. And that's the reason we believe that when it's an earnings-led recovery, that time the re-rating in markets are pretty good, and you will see earnings numbers being upgraded, and therefore we believe that from a 5-year perspective, India should be able to generate a lot of interest from investors. As you get into FY18, FY19, that's the time we're going to see earnings numbers being far stronger than what you're going to see in FY15 or FY16, and when you get strong earnings growth, you also get a PE expansion, and therefore I believe that an earnings-led growth in market is going to be far more stronger for equity returns. We are looking at about 15 to 16% earnings growth. When I say that you're going to see powerful earnings growth, it could be plus 20%. Post that. So the reason being is that even in FY16, we are penciling in about a 6 to 6.2% GDP growth rate, which is almost close to potential.
Okay, so that's actually backdating earnings from Alroy Lobo, expecting big earnings growth only after FY16. Well, back to the day's trading action, all the action from the futures and options space with Varinder Bansal. Tell us, Varinder.
Well, thank you so much. Clearly expired jitters on the last day. Nearly 100 points fall coming in the last 30 minutes only because of the expiry, and that could be important that how markets open up, especially given that tomorrow is a holiday and we'll be trading on Friday. Clearly HDFC, BHEL, ONGC led the fall. Mid-cap basket though was clearly strong because mid-cap index ended in the red. But important is if you just see Nifty Jan futures, they're still trading at 100 points premium. Some people tell us that it's the largest ever absolute premium what is being traded in the futures market. So that is important to watch out for whether you get that up move, early morning up move in the morning or not when we open up on Friday. Clearly if you're watching out for the options data, you're clearly seeing that 8,000 is the base for the market. Huge open interest addition seen in Jan option for 8,000. 8,000 Jan put in fact added over 10 lakh shares in open interest, and on the upside people are watching out for 8350, 8400 being the cap for the market. So keep on watching for these levels on both the fronts. But importantly, the deal of the day, those were the stocks which are moving up today, whether it's JP Associates, which saw a long build-up happening in, the stock was up nearly 11%. Ultratech was strong since morning, the stock was up by nearly 4%, again long build-up happening in, and a rub-off effect also happening on Century Textile, which was up nearly 3%. Some of the stocks which are strong, some of the trading momentum favorite stocks like Unitech, Adani Power, Reliance Capital, all these three stocks saw long build happening in. Reliance Capital, of course, after the ordinance on insurance was passed, that stock was up by nearly 4%. But few stocks which are weak today, GAIL clearly the biggest loser on Nifty, short build up seen over there. BHEL was one big loser when the market started falling down. In fact, the stock was down nearly 3.5% from intraday highs. And two stocks in the pharma space which are weak, clearly Biocon and Dr. Reddy's saw short build up happening in. So every eye on Friday that whether that there is a small uptick which comes in the morning or not after this sudden fall of nearly 100 points in the last half an hour today.
Okay, Varinder, thanks very much for that. There were stocks such as India Cement which gained in the broader markets as well. But Christmas is here, and with that, we're almost set to down the shutters on 2014. The key question, however, is whether you have been good this year. If you have, Santa's here to give you some top stock ideas for 2015.
Santa's got a lot of help coming in from various brokerage firms. So let's kickstart with Macquarie. In fact, on Macquarie is the picks for 2015 include the likes of Axis Bank, ICICI Bank, thrown a couple of heavyweights, L&T as well as TCS, and Maruti, the big outperformer. That one as well is part of the list. And from the mid-cap space, they're looking at Strides, JSW Energy. Pragya says that they're heavily leveraged or not, but Macquarie says that they're one of the picks for 2015. TVS Motors, Sonia has been telling us about the margins, but that's one of their picks as well. And Crompton Greaves and Yes Bank, both of them are part of that list. Moving on to Credit Suisse, they have a couple of heavyweights there. HCL Tech, HDFC as well as Maruti. They are the top stocks, and Havells that have seen a big correction just in the last few days. That one as well is one of their picks for 2015. But what does Morgan Stanley Sanders say? They say, in fact, that ITC, Infosys as well as Sun Pharma, some of those defensives are part of their list. Maruti, Hero MotoCorp as well as Bharat Forge, all of them are there from the auto space. And throw in there something like a Tata Motors, Tata Steel as well as Tata Communications, all of them part of the list. ONGC, Oil India, and a couple of banks as well. HDFC Bank, Axis Bank, IDFC and Bank of India, all of them are part of Morgan Stanley's list. But let's move on to Citi then. Citi says HCL Tech, BHEL, Tata Motors as well as ICICI Bank, watch out for them in 2015, and maybe by next Christmas, that's Christmas 2015, you'll be doing ho-ho-ho with them. Dr. Reddy's, Lupin, Oro Pharma, Axis Bank, as well as Adani Ports after that big run, yet they have it on the buy list. Citi's mid-cap stocks include the likes of Ashok Leyland, Exide, IDFC as well as Voltas, all of them part of that list, while throw in some other stocks like InfoEdge. Rima watches that very closely, and she's watching Santa closely at this part of time. So InfoEdge as well as Shobha Developers, all of them are part of the list. And finally, moving to PL picks in terms of the large cap space, a couple of Rima stocks are in here as well. So TCS as well as Infosys, both of them are in there. And Ekta stocks, the banks that trouble Ekta a lot. So SBI, HDFC Bank, ICICI Bank, as well as Bank of Baroda, they're all part of that list. And a couple of heavyweights, Pragya's big stock, L&T, you don't mess with her when L&T comes out with their numbers. So L&T is on the focus list, and for 2015, that's Prabhudas Leeladhar. And we have Tata Motors, Maruti Suzuki, as well as Oro Pharma. Finally, their mid-cap space from PL Sanders list are Mindtree, KPIT, Cummins, as well as we have Federal Bank, JK Lakshmi Cement, and Ashoka Buildcon. So watch out for all these stocks in 2015. But that's it from Santa. Keep ho-ho-hoing.
All right, Santa, we'll do that. When did you last hear Santa talk about JK Lakshmi Cement and Optus Circuits? And when did Santa speak about Prabhudas Leeladhar and Macquarie? So anyway, that's Nigel Santa D'Souza if you didn't get it. Let's move on to some news from the policy space. The Union Cabinet today approved promulgation of an ordinance to hike foreign direct investment cap in the insurance sector to 49% from 26%, as the legislation, of course, could not be passed in the just concluded parliamentary session, could not be passed in the Rajya Sabha. Speaking to the media later on, Arun Jaitley, Finance Minister, said that he expects around $6 to $8 billion to come into the insurance sector through the FDI route. First, let's listen in to the Finance Minister.
Even though the Select Committee, by an overwhelming majority, recommended the bill for adoption, the same was not permitted to be taken up for discussions because of disturbances. The government therefore decided to recommend to the Honorable President the promulgation of the insurance amendment laws. The ordinance demonstrates the firm commitment and the determination of this government to reforms. It also announces to the rest of the world, including investors, that this country can no longer wait, even if one of the houses of Parliament waits indefinitely to take up its agenda.
Okay, on that note, let's hear out what experts made of the government's decision to hike foreign direct investment cap in the insurance sector.
It has to obviously go through the process of approval by the President, eventually ratification by the Parliament. And until that happens, I guess there would be a degree of tentativeness on part of various stakeholders in this particular area to say that this is now clear enough for them to transact. An ordinance has to be, it's an interim measure, so to say. It signals clear intent and desire to move forward, but it still has to go through a process of approval by the Parliament, a ratification by the Parliament, and only then it kind of becomes permanent.
That 49% ordinance, and it has to become a law within the next 6 months. I think the foreign investors would be looking at the next 6 months. They will be putting their numbers, and they would also feel that within the next 6 months it would pass the bill. And there would be quite a lot of interest, because it's not only the joint venture partners, there would be other investors who would be looking at this. And a lot of capital is required in the insurance industry, because this is an area where the money can actually fund the infrastructure needs of the country.
Well, besides insurance, the Union Cabinet also decided to take the ordinance route for the coal amendments after it was unable to get to those Coal Act amendments through the Rajya Sabha. The first round of the auction for the cancelled coal blocks, deallocated coal blocks, will happen between 14th and 22nd of February. Coal Secretary Anil Swarup also laid out a broad blueprint for the upcoming auctions. Let's first listen to what Mr. Swarup had to say.
63 of these 101 blocks will go to the power sector, and 38 remaining blocks will go to the unregulated sector, which includes coking coal, steel, aluminium, and things like that. So out of these 63 blocks that are going to the power sector, 28 will be auctioned, 35 will be allocated to the state entities. 70% of the mining is for power. Now this is an assumption, it could change. And 30% is for non-power. And if the extractable quantity is about 50%, which would normally be more than that, but this is a conservative estimate that we are making, then the total payment to the states in 30 years would be around 3.5 lakh crores. This is by way 3.5 lakh crores for 30 years for 204 blocks, the entire universe we are taking.
Okay, well, time for a break now, but coming up, Sudarshan Sakani joins in for a technical chat, and we'll also get you some trading ideas.
CNBC TV 18, celebrating 15 years of leadership.